Hello and welcome to another update video about TRB. Yeah, it did rally overnight. It reached basically, you could say, the next target. We're going to talk about that now. And now, obviously, the risk of trading on the long side has significantly increased. So I think the easy money on this pathway to the upside has now been made. I think we might be getting here to exhaustion now. We reached the upside target. I did explain to you that up to $83 is still realistic for TRB in the current wave structure. And of course, it can still go higher. We haven't got a beginning of a downtrend yet, but the requirements for this move to the upside are basically fulfilled now. Looking at the bigger picture again, let's go to the daily chart. We talked about that this is likely an A, B, C structure, where the B wave might have peaked now or could still get a few squiggles higher, but it's basically, did basically go to where it needed to. Of course, there is always a more bullish interpretation, right? It could be, and I showed you that in the last video, that this wave 2 already finished here. That was in May 22, and then we would completely escalate higher now, but it would need to take the price above $162 for me to believe that. And as long as the downtrend hasn't started officially, right, this is a possibility. We need to consider that. But for me, this looks more like a 3-wave move up, which will get exhausted in this region and now has a good time for coming down. Now, we've been tracking this move up as a C wave, not a perfect structure, but we talked about this as a 5-wave move to the upside, 1, 2, 3, yeah, and then 2 possibilities. Either wave 4 was already in and we get a more direct push to the upside, which in the end is what happened. And we did talk about the $41 level and said, okay, against $41, this is what we focus on. However, should we break below $41, we could first come down and then go up. So that basically this 4th wave got delayed a little bit. But that didn't happen. We didn't break below $41, so that level did hold. Okay, our pivot area there, the decision area did hold and provided the jump off point for a rally to $80. Basically a 2x from our support area. Really interesting. I did suggest to our channel members, and also I think I mentioned it on YouTube here, a strategy recently when we came down here to just sort of buy the pullbacks in batches and then sell as the price goes higher, because we didn't really have a precise, impulsive looking structure here to the upside. So it was more, gridding a little bit, scaling in when the price comes down, scaling out when the price goes up. And this would have worked well. Yeah, it would have worked better had the price gone down a little lower, but that's just trading, that's life. Certainly would have generated some profitable trades. There was certainly no short trade set up here at any point, not yet. Maybe there is one now, but I don't see a clear short trade setup yet. I have to say that. Surely the rally could be over and we reached all the upside targets, but I haven't got a clear indication that this uptrend is over. The problem is that on the 1-hour chart, yes, we had quite a bit of a rejection up there, and I think we talked about around about $77 as one of the targets, but it hasn't really started to take out any swing lows. And the problem with this one is to really indicate that the downtrend has started. I wanted to take out the $45 level. So it's quite a bit of movement that's needed. Basically coming down in 5 waves and then moving up in 3 waves. I will take the yellow wave count now off the chart. We didn't need it. Basically this reset of the wave 4, which was only the alternative with the question mark. Okay, so in the end here, the primary scenario was followed. What I don't like is the look of the move up. It looks 3-wave like, okay, which is okay because we're dealing here essentially with a diagonal. The thing is, I'm not confident about this subwave structure count. So I would not tell you, okay, the wave 5 is in now, go short. It can still push higher. As long as we don't take out the previous swing low, this can still push higher. Yeah. The thing is, I'm not entirely sure about this micro count. The problem is that if we're not dealing with an impulse, but with a diagonal, which this one is, then they can always extend, right? It's difficult. The problem is that you're dealing with not very precise price action because it's not impulsive. So we have to give it a little bit of space. So that's just what it is. That's why I highlighted in the last videos, buying on the way down, with a clear stop below that lower pivot area there. And then selling on the way up would be a reasonable strategy. Not telling you to do it, but just sort of providing some ideas for how to approach this. Now that we reached the upside target, I don't see this necessarily as attractive strategy, because we basically reached upside targets, okay? It just means that the risk has now increased. It doesn't mean it couldn't go up further, but it means the risk to the upside has now increased because we have moved so much already. And there are other setups, other charts where we haven't really moved. And I mean, look at this. This has moved since June. Yeah, 1000%. Okay, so at some point, especially now it's in resistance, it just might get exhausted. So I would still allow it to push higher as long as it's holding above the last swing low that I mentioned. And I don't see a clear short trade setup from here unless you really want to do it against the last swing high with a tight stop. That's up to you. I certainly would rather, if we talk about where does the risk sit now, certainly reward is probably more on the side of short sellers here now. But again, the uptrend isn't broken, and you would just be shorting into green candles, which are still stapling here. So that's essentially up to you. I just highlight, the risk to the upside has certainly increased. This is a chart where I would now say, okay, let's wait a little, what happens actually. But that's essentially up to you, and that depends on your strategy. From a chart point of view, the targets are now fulfilled. And for me, it's now a little bit about, waiting what the chart does. If we break above $83.50 there, above the 78.6 retracement, it might need a bit of an adjustment. But remember what I always say, B waves can always overshoot. So this is just standard resistance for a B wave, but they can always overshoot if they have to. Therefore, I would be careful with saying, okay, this is definitely topped, because it's not, you can't say that at this stage. But even in this fifth wave, we now have 5 waves, 1, 2, 3, 4, 5, and we reached the target. So what can I say? If we make one more high, yeah, $83.50 is the next key level here, the 78.6 fib level. And above that level, we just need to see. I mean, if I zoom out a little bit, there is, of course, basically at 83.50, we have also the previous swing highs, right? So it's an obvious level to get rejected. If we push higher, the next level would be, around about $165. But if we get there, time will tell. The uptrend is certainly not broken yet. But for anybody who bought the support areas that we suggested before, we had 2. Certainly this one we had. Can't remember if we had this one on the chart at the time, but certainly this one. It certainly doesn't harm, or didn't harm, to take some partial profits, okay? And then maybe just moving up the stop loss if you are in a long trade here. Yeah, that's my update about TRB. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.